Hello friends, welcome to the video. Hope you're doing well. Today we're going to do a theory to practice session in one of the most famous functions of finance, acquisitions. For this I chose a case which has already seen many rounds of debate and opinions, Tata Steel Limited acquiring Corus. Through this video, I target to get the hands dirty, meaning take a practical case and sort of declutter a balance sheet and see the things the way they are. I've spaced this into 5 parts. We'll start with the overview of the transaction for part 1 and then move on to the balance sheet analysis, both the liability and asset side, which will form part 2 and 3. And then we'll look at the transaction pre and post acquisition, after which we'll wind up with conclusionary remarks. Hope that sounds good. Let's move on to part 1. This page gives a bird's eye view on the two companies as the way they were around at the time of acquisition, which happened back in 2007. First things first, both companies were basically steel manufacturing firms. Tata's focus was specifically in Asia and Africa, while Corus was focusing in Europe. From a manufacturing capability point of view, Corus was a much more massive company, manufacturing around 18 million tons of steel per annum compared to Tata's 4 million tons per annum. In revenue terms also, Corus was massive. The company was generating 5 times the revenue of its acquirer. I remember looking at this during my first year of undergrad student life in 2007 and wondering how this acquisition is even happening. I of course didn't realize the nitty-gritties back then. The logic behind the acquisition though is the poor margin at which Corus was operating. While it had all the capacity to manufacture tons of steel, it didn't convert all of it into profits. Corus was operating at 4 to 5% margin, largely due to very high cost of manufacturing. Between the two companies, Corus's cost of manufacturing steel was almost 100% higher than Tata's, and that is something Tata's wanted to tap on, which was manufacturing steel at 35 to 40% margin. This shortfall in Corus is something Tata's envisaged and must have been very confident to turn things around post takeover, and hence Tata saw immense value in the company. If Tata's could come in and provide access to cheap raw material and access to cheap methods of steel manufacturing, Corus acquisition will immediately look like a genius transaction. The other motive was also the fact that Tata's had the opportunity to enter European markets in a big way. The combined entity would generate a 22 to 23 million ton per annum, making it the 5th largest steel manufacturer in the world, and this will put Tata's in world map of steel production, where they truly belong. The acquisition cost of Tata Steel was roughly 47,700 crores. I arrived at this number after a detailed review of the 2008 balance sheet of Tata Steel Limited. As on the historical conversion rate, this transforms to 6 billion pounds or 12 billion US dollars. The figure itself is quoted in different places, different parts of the media in different forms. Some places it's quoted as 6.5 billion pounds, some places 13 billion US dollars, etc. My view on the difference is due to the different exchange rate considered at various instances of financing which closed the deal. Another astonishing aspect of the acquisition is that Tata's paid the cost of acquisition in full through cash. Typically in an acquisition, if the acquirer is so sure of the future synergies and gains, acquirer tends to pay off the acquisition in cash. It was sort of a bold step to acquire the entire of Corus through cash, which transfers all the risk associated with the acquisition onto Tata Steel itself. Mind you, this is 2007 and $12 billion is a huge sum. Acquisition was funded in 3 parts. Part 1 was fundraising done at core equity through issuance of ordinary and preference shares. Part 2 is debt raised at Tata Steel at a standalone level, at a Tata Steel Limited level. Part 3 is the non-recourse debt raised at Corus level. Let's go into part 1 first. Company raised 4,300 crores through issuance of ordinary shares and 5,500 crores through issuance of preference shares. Totally, company raised close to 10,000 crores of core equity for this particular transaction, for acquisition of Corus. This gets reflected in share capital and reserves and surplus portion of the balance sheet, which I've put snippets here. This will also be present in both the standalone and consolidated form of the balance sheet. Notice that the shares subscribed has increased by only 150 crores over here. The shares subscribed has increased by only 150 crores. This only reflects the face value, and any amount raised beyond the face value will be treated as share premium account in the reserves and surplus. So that basically sits here. Right, this is the premium which is raised on the ordinary shares. Money raised through preference shares is reflected in the core equity itself, right here. This number, which was 0 here, has increased to 5,500 crores because that much money has been raised. So that is part 1 of the financing. Part 2 is the debt which is raised at Tata Steel Limited level. Company raised close to 8,000 crores through debt at the holdco level, of which 3,600 was done by local Indian banks, SBI and IDBI together, and then 4,300 crore was raised as convertible alternative reference security. This is over here. So this is a form of a dollar bond raised in US dollars. Basically it was $875 million raised in the form in dollars. So this again, if you could find this in both the standalone and consolidated financials of Tata Steel Limited, right? So this particular snippet is from the standalone financials of Tata Steel Limited, and this will get reflected in standalone also because this debt is raised at Tata Steel Limited level. Part 3 is the final leg of fundraising, which was conducted through a non-recourse debt of 30,000 crores, which was raised at the Corus's books. This loan was secured by the assets and operations of Corus, and this was required to be paid through the operations of Corus itself. So technically, Tata Steel Limited did not have any recourse on this loan. If Corus failed, 30,000 crores of loan goes bust there itself. Tata Steel does not have to technically come and protect that debt. This debt will not be visible in Tata Steel's standalone numbers as the debt is raised at Corus's level, nor will the debt get reflected in the contingent liabilities of Tata Steel Limited as this is non-recourse in nature. Compared to the debt raised by TSL level, risk profile of this debt will definitely be higher. So net company raised before we go to the conclusion of this particular part, let's appreciate where this 30,000 crore is increased. So this is increased in the consolidated debt portion of Tata Steel Limited. So this number, if you go to the Tata Steel's standalone number, you will not find this and the explanation I just explained some time back. So net totally 47,700 crores was raised, 17,700 crores at Tata Steel level in the form of debt and equity, and 30,000 crore was pure debt which was raised at Corus's level. So that's how the number comes at 47,700. I hope you are able to appreciate this. Moving on to the asset side. Financing was all about liability portion of the balance sheet. In asset side, all the assets of Corus will obviously get recorded, which will be pretty straightforward and driven by standard accounting methodologies. What is slightly tricky is the plug utilized to balance the statement, which is goodwill. The plug is called goodwill. The portion of money TSL paid more than the fair value of Corus will get recorded as this entry. Notice that the goodwill consolidation has zoomed up by 18,000 crore in the acquisition year's balance sheet. This is precisely the goodwill which Tata Steel's consolidated financials has recorded for this acquisition. In part 4, let's do a qualitative analysis of the acquisition. What were the factors which made Tata's go for it? Market entry is an obvious one. Through Corus, Tatas were placing a giant step in European steel market, and this is something even for Tatas it was impossible to build ground up in an organic fashion. Capacity expansion was another obvious aspect. Tatas At the time, capacity expansion was another obvious aspect. Tata's at the time was a well-run company with a strong cash balance and ability to generate cash flow year on year. You can't blame it, it was the year 2007. Imagine the difficulty of going through the organic way. A project of that magnitude will take years and years to wade through approvals, land acquisitions, project management, and manage the amount of politics which was involved into the picture. Hence, inorganic route made more sense. Through this acquisition, Tatas were going up from 4 million capacity to 22 million so quickly. Acquisition also provided Tata Steel access to market with better price realization of the Western markets. Corus was selling steel at 30 to 35% better rates than Tata's, which is understandable given the regions the two companies they operate in. As discussed earlier, the major opportunity Tata saw in Corus is its ability to contribute and improve the operating margin of Corus. Corus was operating at abysmal margin of 4 to 5%, while Tata's perfected this and was operating at 40% margin. This is one of the major reasons why Tata's believed this acquisition would provide the value to the shareholders. As you can see, the margins of Tata's were so much more superior to Corus, and the cost incurred per ton by Tata's compared to Corus was like 50% of what Corus used to incur. I also put a small snippet of the P&L, how it during the year the acquisition happened and how the P&L looked. As you can see, Tata's were generating 18,000 crore of income, of which EBITDA was around 7,400 crore, resulting in an EBITDA margin of 41%. Corus, on the other hand, was generating 83,000 crore of revenue, 5 times Tata's revenue, but margin which was lower than Tata's margin, 3,800 crore only, with 5% margin. The purchase EBITDA multiple for this transaction for Tata's were at 12 to 13x, which was definitely on the higher side. But what Tata's looked at was, if they could come in and improve the margin of the company, make it say 10%, 15%, immediately the EBITDA multiple will fall by a factor of 2. It could become a 6x, 7x transaction, which would suddenly look like a very cheap transaction. In the final part of this video, which is post-acquisition analysis. Post-acquisition, things did work well for the combined entity for the first 1 year. At combined revenue of 1.32 lakh crore, with operating margin of 15%, non-Tata Steel EBITDA, non-core Tata Steel, which is basically the Europe business, EBITDA margin was 9%, up from 4% at what it was operating at Corus's level. It definitely was a successful year, the kind of results which conformed to the price paid for the acquisition. It proved that A, Tata's could take over and improve the operations of Corus and thereby generate better value out of its operations. B, at EBITDA of 10,000 crore mostly generated out of Europe operations, price of Corus's acquisition suddenly looked cheap at 5x multiple of its EBITDA. This was the results as on FY08, as on March 31, 2008. The company, in the annual report, portended a looming financial crisis and its impact on the business in the coming years. Company projected turbulence in upcoming years due to impact of financial crisis in the Western world. In 2009 and 2010, demand for steel in the Western world fell while that of developing nations continued to develop. China was in the forefront, exhibiting strong growth. Remember, back in 2008, China's consumption of core engineering such as steel and oil was on the rise on the back of mega 2008 Olympics. Notice the graph below. Between 2008 and 2009, consumption of steel fell across the developed nations, including Europe, Japan, etc., while that of India, China was on the rise. Accordingly, this trend was visible in steel companies also. You see the ArcelorMittals and POSCOs of the world facing a slump, while that of the Chinese steel companies, which were manufacturing and selling more and more steel. Even Tata Steel was manufacturing and selling more steel in India and Africa. They were exhibiting growth in this region. Unfortunately, our subject company's biggest bet was not in India and Africa, but it was in Europe, which was floundering. This massively affected Tata Steel and not only raised doubt about the acquisition, but questioned the very existence of the company. This particular graph shows the picture more clearly. The orange line indicates this orange line indicates the sales done by Tata Steel in India and Africa region, and the grey one indicates Tata Steel's Europe sales. Notice the massive bust in 2010 and the fact that the income level hadn't risen to 2008-2009 level as late as 2018. The trouble in Tata Steel Limited was in the trouble that Tata Steel Limited was in is more obvious through this little snippet over here, this particular snippet here. Notice the green lines is Tata Steel standalone financials, and the red one is this non-core, non-Asia Africa business, which is basically effectively the Europe's business. Notice that the Tata Steel standalone revenue and EBITDA were taking a steady path of growth even as the world wades through a recession. Also notice that the non-core TSL, which essentially is the Europe business, the EBITDA was negative in 2010 over here. Even as late as 2013, EBITDA of the subsidiary was 1/13 of the operating margins generated in 2008. Right? So this really summarizes how much of a catastrophe this acquisition was for the company. I have a snapshot of stock's performance during this period. This acquisition had wiped out 50% of shareholders' value over the years between 2007 and 2013. During the financial crisis, while shares of a lot of Indian companies were battered, Tata Steel Limited shares were especially impacted due to the failed acquisition, losing 60% in this period in a short span, while Sensex and Nifty lost only 30%. On a conclusionary note, I'd like to state a few things. The deal was a typical high-risk, high-reward transaction. The kind of transaction you'd look back and say, oh, we shouldn't have done this. To be fair, it was also a case of very bad timing. Can't really blame Tatas to have not seen the crisis coming, as it was brewing in the West only. We have a very countable number of Indian groups who can dare such a risk and come out of it in one place after failing in it, and Tatas are definitely one of those. Thank you for watching the video. I hope you enjoyed it.